and welcome to the latest episode of the Insurance COVID Cast, brought to you by Insurance Age and Insurance Post. Now, it is true of buses as it is of Insurance COVID Cast, is that you wait for one about business interruption and two come along very close after each other. So after Friday's COVID Cast, where we looked at business interruption with loss adjusters, today we're going to look about how we can move past the impasse which seems to be happening around BI claims to perhaps improve the reputation of the insurance industry. I'm delighted to say, joining me today, I have Stephen Knock, who is a partner at Harris Balcom. We have Ashwin Mistry, OBE, who's a past president of the Chartered Insurance Institute, also the executive chairman of Brokerability, and finally Daniel Duckett, who is the owner of the Lazy Clare Patisserie in Belfast, also a member of the Hiscox Action Group. Welcome, gentlemen.
Hey.
Perhaps I'll come to you first of all, Stephen. Now, hindsight is an amazing thing, but do you think the insurance industry could have taken control of this BI narrative earlier?
Yeah, I think they do. Obviously, bad news is never going to be well received, but it is best delivered early with compassion and, importantly, without bias. And I think, obviously, we had a situation where the government announcements led people to believe that generally they would be covered when, in fact, many aren't. And perhaps a more coordinated response from the industry to explain what would trigger cover and what wouldn't, very early on, might have managed that situation better. But I think as a firm that sort of represents claimants, what is also true is that there's a lot of attempting to manage those submissions of claim by insurers in a way that isn't as upfront as it could be. So, you know, there are statements out there saying our policies do not cover COVID-19. Well, that isn't very surprising if you're saying that your policy doesn't specifically refer to COVID-19, of course, because COVID-19 was very recently identified at the end of 2019, but that doesn't necessarily mean that there isn't cover. So I think people are feeling, certainly the clients and the claimants that I've spoken to, even those where they don't have cover and we say to them, sorry, we can't help because you haven't got cover. If it's done in the right way, it can be managed in a way that people can accept and move on with. And similarly, where there is cover or where it's grey and perhaps some flexibility is needed, a more sympathetic and empathetic approach could be taken. And you know, that is what the industry needs to try and do to rescue its reputation, I think.
Daniel, come to you.
Yes, I would completely agree. I personally, from being on the receiving end of a denial of our claim and having seen the 300 plus members that are part of our group also having the same sort of denials, it does seem to be sort of a copy paste sort of reaction. I know that there are insurance policies that are really watertight, and I think, in my personal view, if I had one of those, you know, I would have sucked it up and said, right, you know what, we're just not covered in this instance. You know, and that's why when I went to my policy, read it, reread it, could probably quote it to you now. You know, I wanted to make sure, you know, and that for me was the biggest thing, you know, and all of our other members have done the same. So while I understand that there does need to be a sympathetic approach, there also needs to be an approach that, you know, is in the best interest of the customers, even if that does cause pain for the insurers. You know, regarding going forward, I think, you know, policy should be tightened up a bit more, you know, to say what their expectation is of situations that may happen, you know, what incidents they really just cannot cover at all. But I think in contrast to that, we do see policies that, you know, that exclude certain things, you know, that are very well written. So, you know, the sympathy, you know, has to be in respect to the policy as it is.
Ashwin, finally.
Well, first of all, thank you very much, Jonathan. So just to make clear to everybody, I'm not representing the ABI. I'm not representing BIBA. I'm just representing my business as a broker. I think so let's just put things into perspective a little bit. We are today perhaps 5 weeks into the lockdown. Number two, insurance contracts have been challenged both publicly, privately, and introspectively by the insurance market themselves. And I do have a lot of sympathy with what Daniel has said, because he's absolutely right. It's a policy and it's a contract of insurance, and it is now basically, will the contract play, and what triggers are there within the contract wording that applies to the individual policyholder. So I totally understand and sympathize with that. Just going back to my first point, we are 5 weeks into this crisis. I think there's been an element of what we regard as panic initially over the first 2 or 3 weeks, and now there are situations where we now see practicalities playing out. And I'd just like to explain that a little bit. Immediately following the lockdown, panic set in amongst insurers, businesses, right across the country, and obviously government included. And I think a lot of irrational statements were made early doors. Now, I sit here monitoring exactly what goes on a day-to-day basis, and the agenda seems to be extremely fluid, and things have moved on. So I think where our position is at the moment, we haven't gone public with insurers and having a public spat. We have, as you know, Jonathan, asked for calm and retrospection. I think a number of insurers, of which Daniel represents one, perhaps went out too quickly. And I think they should have perhaps taken a little bit more time, considered what was going on, understood what government action was following, and also really understood the mood music of the policyholders out there, and also what is in the public interest. And one of the issues you're going to raise later on, I hope, is about reputation. So that's where we are. But then also adding to what Stephen's business has to do as well, is one, establishing policy liability, as we have to do as brokers. But as Stephen will confirm, you also then have to substantiate loss. And that, I think, Jonathan, also needs to be discussed today, because yes, you will have elements of cover in this, in what we would regard as sort of standard or / boilerplate endorsements that have been put in unintentionally or otherwise. And again, we can talk about how the markets have gravitated to the lowest common denominator for a later conversation. But I think, as Stephen will confirm, business interruption is probably the most difficult area to navigate, both with the policyholders concerned and with the insurers, because it's very emotive and extremely subjective as to what the business would have done in the absence of any policy trigger. So I think that's going to be one of the major challenges once liability is established one way or the other. And I do have a view on that, which again, I could share a little bit later. But I'd just like to say it was a little bit too fast, too quickly. We're 5 weeks into the lockdown. A number of insurers have definitely panicked and gone public, and perhaps now, with hindsight, they'll be thinking twice about that.
Can I just ask, Ashwin, obviously there's now a new cross-industry body that's been set up, headed by Stephen Catlin, in terms of reputation and what's going on. I mean, do you think is that too little, too late, or do you think that could now perhaps move ahead and is a sign that the insurance industry is waking up and need to do something here?
I think, again, Jonathan, you followed my history a little bit. I've been talking about one voice for a very, very long time, and maybe this is a moment for the entire industry to come together. And I think what Stephen Catlin is potentially looking at, it's never too late, because there'll be lessons when everything gets back to normal, whatever definition of normal is. And I think there'll be a lot of stakeholders involved in this, and I think even Daniel's group could be part of that solution as to what policyholders think they're buying, as opposed to what the insurance companies, who are by and large private institutions, not charities, and they've got to run a business, and contract law comes into place. So I think what Stephen has started is definitely not too late, because I think a lot of people will be reviewing their positions, both insurers, businesses, government, all stakeholders will have to take a very deep, long look as to what has happened, and what we, to be honest, Jonathan, and I would include Stephen in this inclusion, that we've allowed our sector to perhaps provide areas of cover that we shouldn't have done, and allowed where policies have just expanded and expanded, and prices have just fallen, and unfortunately, it's become a commodity at the lower end. And I think also one of the challenges that's going to face governments as well, and similar that we had it with flood insurance, and then subsequently with terrorism. I think one of the solutions going forward has to be some sort of uniting between insurers, other stakeholders, government, into some sort of pandemic re, because this isn't going to go away, and we do fear what the next calamity is around the corner.
Stephen, have you been invited to join the cross-industry group? And do you think something like that is important? Like you said, to speak with one voice.
Okay, so I haven't been invited. That was one of the points I was going to make. I think it will be important to have representatives in that body that are used to representing claimants, and maybe some claimants themselves, as Ashwin said. But certainly, if not me, then someone like me who is routinely involved in the presentation of claims for policyholders and understands the issues that they face and the breadth of response across the industry, not only in this situation where they're actually generally quite united, but normally as well, because that's an issue too. Ashwin made another point that's quite interesting, and one that I've been banging on about for a while, which is that insurance at the non-big corporate end is very much treated as a commodity product. It's almost a grudge purchase. People buy it hoping they never have to use it, obviously, because something bad must have happened to trigger that. And so perhaps the tendency in the industry has been to compete on price, but not all insurance policies are the same, and never has something happened in quite the same way as it has now to make that obvious to people. And I think later on we're going to discuss about what this might mean for the future. And I think it will mean a change in stance by buyers of insurance, as well as insurance providers and brokers, because it's been brought into stark contrast. In fact, someone I was speaking to the other day said that they've known me for 20 years. I've been dealing with business interruption claims for over 20 years. They have never heard that phrase mentioned on the news, on the radio, on webcasts, etc., etc. It's suddenly come into the forefront of everyone's minds. Coming back to the question, I think Stephen Catlin obviously has a really impressive pedigree. He probably is the sort of person that can pull people together and get the industry to focus on this problem going forward. Is it too late? Well, it's not too late to start to address the problem for the future. And by that, I mean, the suggestion is that they're looking at setting up some sort of pandemic re in the same way that flood re was brought about. And I think that would be a good thing, so that it would, if it comes to fruition, allow people to buy pandemic cover in a more mainstream way than has been available before. In terms of, what I'm not sure about is what it's doing to focus on the problem right here and right now. And that, of course, is quite a big problem for tens of thousands of businesses, small and medium and possibly large too. And I don't know whether there should be, there may be, I just don't know, but maybe there should be a phased approach or two streams of that cross-party process, where one of them is focused on what can happen now to help the people who are suffering now.
So to that point then, Daniel, I mean, do you think there is what could the insurance industry do now in your eye to basically kind of repair the damage that might have been done to reputation? And do you think now this is a case that the government and regulator will ultimately end up stepping in?
So yes, I think that right now is a good test case for everybody's reputations. It is not too late for Hiscox to acknowledge there have been problems with their response. I'm not going to say that they have to claim, responsibility for the policies, because ultimately that's their decision to make. But I think it's their approach to multiple insured to say, right, what, our approach to this has been poor because we haven't really communicated with you other than copy and paste emails. We've taken your complaints, but we haven't really advanced them very far. So if they were to acknowledge the problems that have gone on so far, and were to be able to come up with constructive solutions for the businesses who have this policy wording, I feel like if they were really willing to work with the insured, it may not improve their reputation, but it would certainly help it from deteriorating further, because their silence says a lot. Their silence in, the past 5 weeks has said a lot to the policy holders. Some of the statements that they've made to the media have been very generic, very matter of fact, but they haven't spoken to the human need, the 300 plus businesses that we alone represent, some of whom are independent traders and some of whom have 30, 40 employees. So if they were to recognize that human impact, for me, it would go a long way. I might not insure again with them, but I wouldn't have such a bad taste in my mouth. Speaking to going forward, I think that there does need to be stakeholders from all of the different parts, not only insurance brokers, not only, the insurers themselves, but also policyholders to give their interpretations of policy wordings, areas that might be gray. So for instance, if I want to come up with a new pastry, it's all well and good that I love it, but if our customers kind of have a bit of feedback, well, it's not, it's not sweet enough, it's not sour enough, I just don't like it because it tastes like this, I can be really confident in my product, but if it's not selling, or if the customers are really disappointed in it, then it doesn't do any good. And so it's the same with policies. We need to have the customer's input to say, right, well, this is what I believe this policy should say, and this is how I read it. And, have a focus group, as it were, to test out different policy wordings, with the goal of making sure that the customer understands, because the customer can go to the insurance broker. I bought mine directly from Hiscox, so I don't really have the intermediary, and if the policy is clear enough, and worded in a way that is really tight, there won't be these action groups that need to go forward in the future. There won't be confusion. And I think that would benefit the insurance industry as well, in that it would probably, reduce the amount of complaints after claims, and it would make the process easier for everybody.
Ashwin, do you think we can win back the public trust here as an industry? And do you think there is a danger that the government could step in, or regulator could step in, and ultimately they could take this out of the industry's hands?
Yeah, I think a number of interesting points have been made, Jonathan. First of all, I think the industry wide has already been found guilty by public at large. And I think that's a very dangerous position to start to build trust from. That's my first point. The second point, and I think, I do sympathize with what Daniel has said, but again, from our perspective, if pandemic cover was available, and if I look at the numbers again, I sort of look at numbers all day, every day, the global governments combined have put together something in the order of $7 trillion+ towards this issue. The entirety of the global insurance market is less than 2 trillion. So it would have wiped out every insurance company that we can think of. Secondly, I'm just reading numbers again. The UK insurers last year paid just over 7.5 billion in claims. And I think, I sort of go back to what Daniel's saying, but let's say pandemic, let's turn the clock back. Let us definitely turn the clock back and say, if pandemic was available as a potential trigger, what would the cost have been over the last 10 years? And I've gone public, even on £1,000 policy, that would have accumulated about £500 per year for the last 10 years. So as a small trader, which we deal with, if the premium for a composite package was £1,000, would they have paid the extra 500 for pandemic cover? Question mark. Hindsight's a wonderful thing. And I think we have something similar on cyber. The take-up of cyber is so low, despite everything that has been publicly proclaimed in the press by us as brokers. The take-up is less than 10%. And that is a genuine risk. So I totally accept the situation that's been put forward. Pandemic was never intended to be a form of cover that insurance companies could underwrite. There's no track record on it whatsoever. And I think it is these boilerplate clauses, which is where Daniel's coming from. The clause allows for the policy to potentially trigger, and that's the issue with the policies that Daniel was talking about. Interestingly, again, Daniel refers to, he's dealing directly with Hiscox. As brokers, we have a responsibility to talk through with our clients, as required under the Insurance Act, to make a fair market presentation, and the policyholder now has to ask for and declare all his or her own known risks. Now, I'm not sure how far that's cascaded into the direct space, but I know as brokers, we have to spend copious amount of time with clients in explaining their exposures, and pandemic, to be fair, has never been high on the agenda. Now, when you consider even a modest business in the UK paying, let's say, £10,000, for us to carry out a full compliant pre-renewal exercise would take about 3 hours. Now, how long have policyholders got? Is it, as Stephen has said, the lowest common denominator, click and go? You've seen the rise of direct writers, of which Hiscox is one. And I think just for Daniel's benefit, Hiscox are not alone in this. And I think there are other insurers who've perhaps escaped the glare, which your publication has now highlighted again, Jonathan. It's more than just Hiscox. It's an industry-wide issue. And I understand that Daniel is representing one particular class action with one particular insurer. And again, you've commented on, and therefore answering your question about reputational damage, I think by definition, and Stephen did make the point when government announced that the public authorities clause would kick in, therefore all policyholders could now go and make claims. The volume of calls even across my group was phenomenal, because that set the bar for expectation that all policies cover business interruption. And one final point, if I may, when we talk about business interruption, it is not business interruption in general, it's the specific clauses within that which apply to denial of access and the public authorities clause, which will have specific limits anyway. So I think everybody's overreacted. I think it needs a little bit of retrospection, and I think Hiscox were too early into the market. And I think maybe when things do calm down, and they understand the mood of the public and the public interest. And again, just for Daniel's benefit, I'm sure he knows, and his group do know, there was a request by the FCA with a DSCO letter that required insurers now to pay claims where there's ambiguity and do the right thing. I think the Treasury Select Committee chairman also went public a couple of weeks ago today to ask the insurers to do the right thing. And I do see the mood music definitely changing amongst the top 10 insurers, where how they're going to react. I would just ask a little bit more calm. Things will manifest themselves over the next 2 to 3 weeks. The lockdown will ease. We're expecting businesses will begin to get to some form of normality. And I just really want to stress how you're going to establish loss. And Stephen is more qualified to comment on this, but to demonstrate the economic loss is going to be a very challenging issue. And yet again, that will not help the industry, because trying to explain business interruption to a modest business is going to take a long time.
So Stephen, to Ashwin's point, I mean, you probably help answer that. But also, I'd also like to know, from your point of view, Stephen, when the dust settles, what do you think the future of the future will look like for both business interruption policies and also for cover for notifiable diseases?
Okay, so starting with what can they do and what's the difference between admitting policy liability and quantifying the loss? I think Ashwin's point is an important one. I am seeing and have seen a significant number of insurers declining on the basis that, A, we don't think it's covered because we never intended it to be. And even if it were, your loss would be nil. And those 2 points are quite different. Is the policy cover triggered? Is a yes or no answer question. And there might be debate about it, but ultimately it's either a yes or it's a no. And that is the first stage of the process. And once it's yes, we should then turn our minds to quantifying the loss, which Ashwin is right. That is what we do day in, day out. And there are intricacies of the wording that may or may not, well, almost certainly will affect that quantification of the loss to some degree. And I think that point has probably been widely lost in the debate that's public. But it is a valid point. But it's not right either for some insurers to be saying, well, we think it's nil, so we're not going to say yes to policy liability. That is the wrong answer in many cases. So I wanted to say that, and also that I think, what can they do now to rescue the situation? Well, they can follow, as Ashwin said, there's been announcements and open letters from the FCA and the like saying, if the policy is grey, if it happens to cover even though you didn't intend it to, then respond. And I'm encouraged that Ashwin is seeing insurers respond to that. I have to say, so far, from my perspective, I haven't really seen that movement yet, but I hope it's coming, because that is what needs to happen to allow us to move on from this, and to allow those that do have cover to benefit from it at the point where they really need it. It's not going to be any use at all to win a legal case in 3 years' time. That won't help them. So we need to bear that in mind. Coming to what will this mean for the future? I think generally, I've spoken to literally hundreds, if not thousands, of brokers over my 20-odd years, and always one of the issues they face is not getting the time in front of the clients at renewal or pre-renewal to talk in detail with the people who know enough about the business to give them the answers that they need. So that is a problem, and I think that will probably diminish. Certainly in the early years following this crisis, people will be much more aware that they need to pay attention to the cover that they're buying and what it might mean. And so brokers can expect many more questions, I think, much more informed purchase decisions, and the opportunity to spend the time they need with the client to get those answers. And I think it will also, there's other issues with BI cover, and there have been for many years. So there's a lot of people buy it as a package without realizing that you can extend the period of time for which you are covered. A lot of people don't understand, if it's a gross profit wording, what gross profit means in insurance terms as compared to their accounts. And then they only find out about those problems at the point of a normal claim that's triggered by fire or flood or theft or whatever. But it's still an issue. And I think hopefully we'll see some of those diminish as well because of this focus on business interruption. Whether that will last is another point, isn't it? Because the human tendency is to focus on now, remember the lesson very, very clearly for the next year or two, and then gradually it fades over time. In terms of cover exclusions for notifiable diseases, we're already seeing, for clients that we're acting for, both on COVID and non-COVID related matters, we're seeing if they're going through renewal, a lot of those renewals now make it very clear that COVID-19 isn't covered. Anything to do with a reaction to and an aversion to the spread of risk, the spread or risk of COVID-19 isn't covered. And so we're seeing those come in already as a very rapid response by insurers. And I think that will, with time, that will tighten further. What I hope, and I take Ashwin's point, that many people, if they'd been offered pandemic insurance cover, probably wouldn't have chosen to buy it, because that is true of better BI cover, longer periods of interruption, cyber cover, and various other things. People don't necessarily recognise the benefit of that outlay year on year for a one-off claim that may happen in 10 years' time. But at least they would be informed if they are offered it with a price, and I suspect next year they probably more would buy it than 10 years ago. But I think we'll see something like that. So decisions will be actively taken rather than treating insurance as a commodity product. And I hope there's a general focus on wordings too. So in 2012, there was a BI wording review published, and it was a joint effort between various industry bodies, which highlighted the common problems that arise at claim time and identified ways in which insurers could address those issues. And some of them have been adopted by some insurers, but maybe this is the trigger that brings the industries together to recognise that there's a need to make the wording easier to use, easier to buy, and easier to apply at the point that you have a claim.
Ashwin, that brings you back to you, and one voice, bringing the industry together. Do you expect to see much changes in BI cover and also cover notifiable diseases going forward?
I see lots and lots of changes, Jonathan. I don't think it's going to be limited to insurers, but I just to stick to this agenda, I think everybody's going to take a very long look into a whole range of areas. I think the balance sheets of all major companies, including insurers, has been severely damaged. I don't see any of those recovering for the next 3 to 4 years. So I think there's a lot of there's a lot of repair to be done. I think insurers, again, as I mentioned at the start of this conversation, Jonathan, were providing capacity like confetti. And I think a lot of the MGAs, plain vanilla, will come under scrutiny. I think those bespoke MGAs that want wide wordings are also going to come under scrutiny. I do not believe going forward, extensions are going to be handed out by underwriters willy-nilly. Everything's now going to be costed. And I think the other issue is just so everybody's aware, is and I do need to just make this point. When all this does settle down, people are already beginning to look at what is going to happen next. We as a business are looking at a lot of our staff now working from home. Is that now the way forward? Do I need as many premises? Do I need as many staff? What am I going to do now? Because productivity has risen despite a 10 to 15% drop in number of hours being worked. So I think there's going to be a massive look as to what happens going forward. Consumers out there, and Stephen's absolutely right to point out, will have to spend a bit more time and a little more energy looking at the cover that they've got. But whether that lasts beyond 12 to 18 months when things have gone back to normal, I would suggest that remains up for debate. So I think policy extensions, giveaways to large consolidators on wordings is definitely not going to be the order of the day. Everybody's going to have to relook at this particular area because it's just not viable for the sector to continue as is. And I think there's never been a better opportunity for the entirety of all stakeholders, including government, to look at what we're doing, because some of the losses, including the number of deaths we're occurring, is the lack of PPE, which has been very well broadcast. And again, insurers have to accept liability for that because of something that's beyond their control. And one final point I just want to make as a policy, and I think people need to understand this very clearly, there's an underlying responsibility for all policyholders to mitigate their claims. Now, we're talking to a number of clients who are saying, well, what does that mean? Now, you can have an office, for example, insured with any reasonable carrier, where I suggest offices are perhaps working more effectively and will find it very hard to substantiate anything beyond an increased cost of working, but offset against their expenses. So again, Stephen, when he looks at BI, he knows clearly that insurers will be looking for what the business has done to effectively mitigate their loss. Now, again, Jonathan, to repeat, even on motor insurance, where you and I have accidents, one of the requirements is for us not to admit liability. And that extends not even going to see somebody that you've injured in a car accident when it's clearly your fault, because that will just get litigants going through the roof. And we've seen the rise of no-win, no-fee insurer claimants and legal practices that have capitalized on this. So it's a wider issue than just insurance. I think everybody's got to take a long, cold shower and look at what we've been doing, gravitating to the lowest common denominator, and individuals have to take responsibility for their own actions. So there will be a lot of retrospection after this.
Well, gentlemen, unfortunately, we're out of time. I'd like to thank my participants today, Stephen, Daniel, and Ashwin. Thank you very much, gentlemen.
Thank you.
Just to remind you to stay tuned for future editions of Insurance COVIDcast on Insurance Age and Insurance Post. And if you want to subscribe to Insurance Post or register Insurance Age, then please use the tab at the top by the heading. Until the next episode, stay safe. Goodbye.
Bye.
Goodbye.
Cheerio.